Time now for the markets with Leighton, and he says that the NCBA has some interesting research on millennials.
Millennials, if you've forgotten, that's a generation now about 30 years old and younger, and what they found, not necessarily a good perception about beef. More on that in a moment. Also in our headlines this week, some Chicago traders are blamed by analysts for the negativity in the feeder cattle market. U.S. milk production jumps year over year, and growers are advised it may be a bit too early yet for cotton price fixing. The average trade guess in advance of the August 22nd Cattle on Feed report has placements down 9.5% from last year. In the meantime, the feeder cattle sector in particular has been put somewhat on the defensive. Analyst Walt Hackney put the blame squarely on traders at the Merc when speaking to a state fair crowd.
They are driving the attitude of it's a bearish market, we lose $10 a hundred, we're going to lose more, etc. if Russia doesn't step up to the plate, and so forth. I don't subscribe to that. We've got the lowest feeder cattle inventory, well, at least since the 1950s, and maybe beyond. It may be in history. But the fact remains that inventory is anywhere in the area of 2 or 3 or 4 or 5, and there's a lot of debate on that, short of where our needs are in regard to the feedlot capacity and the packer capacity and the inventory that we need to supply them.
New research indicates that a majority of the millennials amongst us, that's the generation born between 1982 and 2001, associate factory farms with beef production. The NCBA says at 79%, it's a higher figure than even associated with the poultry and pork industries. The beef trade is now identifying messages to use in the near future to try and change those factory farming perceptions. Well, over in the pork sector, lean hog contracts are under pressure as this week nears an end. Analyst Mark Gold says hogs are in a tough bind here, particularly with pork being on Russia's list of banned U.S. ag products. He thinks the price losses this week, though, are not surprising.
I think we've kind of budgeted in this in. The Russians take about 5% of our pork, so that's going to be a little bit of a hit here. There's going to be more product available, and I think all that combined with the poultry, we're going to see a little bit cheaper prices out here.
Milk production in the United States posted a jump in the month of July. DTN is reporting production for the month totaled 17.5 billion pounds. Now that's an increase of almost 4% from a year ago. The U.S. dairy herd added 37,000 head. Milk production per cow increased by 64 pounds. We break from the markets to look at the trivia quiz for this week. And here is the question. In the Mississippi poultry industry, how old is a broiler? Is the answer 4 weeks or less, 8 weeks or less, 12 weeks or less, or 16 weeks or less? I'll tell you in a moment at the end of the markets. The USDA's first survey-based forecast of this year's cotton crop increased production by 1 million bales. Extension Ag economist John Michael Riley has been reviewing the data from August 12th. He shared some analysis and comments on this week's rally. Well, John Michael, December has enjoyed its highest close in quite a few days. What sparked this rally?
It has a lot to do with the general economy, the global economy. A lot of positives have been filtering in, data points coming in from a macroeconomic standpoint that show that the economy is improving. It continues to on this track of improvement. And as I've mentioned before, cotton very receptive to what happens at the general level, and so that's really what's feeding it. I do know that the geopolitical concerns are still very alive and present, but it appears as though those are starting to dissipate just a little bit, and all of this together has really provided a boost to the current price. Of course, we also saw a slight dip in condition ratings from a national perspective in Monday's crop progress and crop condition report, so that also helped kind of spark it to some degree as well.
And I guess, as you've noted, the stock market is playing in there along with condition ratings and everything else. Now, that August crop report, it did increase projections as far as U.S. production by about 1 million bales. Yes. But the market itself at that time didn't react wholeheartedly to the South. I mean, it didn't really trip the market that bad.
No, the market's been at a very relatively low level, some people might say a level of support there on the bottom end, but you're right. I think everybody expected an increase in terms of both harvested acres and yield. We saw that with that report last week, and some of that's going to be consumed in the export market. Domestic use was unchanged, but we did see an increase in ending stock. So it's putting some pressure in terms of being able to try to rid ourselves of this supply that this boost in supply that we're going to see as a result of better weather mostly across Texas. But again, it was largely expected and didn't really do a whole lot of damage to prices that day and following days.
Now, some analysts have declared there is a floor under this market, or a better floor, but of course there are no guarantees as far as if things turn around, what may happen to the South here.
If there were guarantees, I probably would be talking to you today. I'd be trying to capitalize on those. But you're right. Yeah, this thing could turn around if the general economy does start moving in a southward motion. But overall, we're not seeing that. We're seeing some strength and some resiliency both in the cotton commodity market and in the general economy. So those have been both positive for prices here lately.
Before our feature story, let's check the trivia answer for this week. The correct choice is C, 12 weeks or less in age. Broilers are bred specifically for meat production, and broilers are what most chicken farmers in the state produce.